All right, so if you are not self-employed or own multiple homes, then there's only 4 documents you really need in order to buy a home. So I'm going to go over them fairly quickly and stick around until the end because I'm going to provide some bonus content. If you are self-employed or if you do own multiple homes, what type of documents that you need to kind of gather to be prepared to buy that next home, okay? So the very first document that you're going to have to gather and provide is the last 2 years of your W-2. Now, typically you should be able to obtain this either from your payroll site or from your employer, or they should be mailed to you on an annual basis, right? So that's going to be your summary of what you have earned, and kind of it breaks down, the taxes that's been taken out. So if you are a W-2 employee, you should be well aware of this. I'm going to remind you to save on to those if you don't know if you're going to have access to the payroll system to obtain it. Now, also, if you are thinking about switching jobs in mid-year, make sure to save those W-2s, or make sure that those W-2s for the prior year or for the prior employer is going to be sent to the correct address, because it is required during the underwriting process to obtain those W-2. Okay. Now, the second one is going to be pay stubs. That's right. So pay stubs, it's what they're looking for is the last 30 days of pay stubs. So if you are getting paid semi-monthly, which means you typically on the 15th and then the last day of the month, then you're covered. All you're going to need to provide is the last 2 pay stubs. If you're paid bi-weekly, I encourage you to just provide up to 3, just in case. It depends on the underwriter, and sometimes they're picky. They're saying like, hey, this doesn't cover 30 days, it only covers 28 days, so we need another one. Some underwriters are like that, so I apologize. So, the best thing to do is just gather the last 3 pay stubs, the most recent, okay, not any pay stubs, but the most recent one. So, right now we're leading into the end of the month. That means for any given month, and let's say it's the 22nd, right? Then you're going to want to provide the most recent one. If you're paid semi-monthly, that means it's going to be the one that was paid on the 15th, and then the one on the 30 or 31st of the previous month, okay? So just reminding you, and this is going to be typical for most loans, okay? Unless you're doing some type of special loan, conventional loan, FHA loans, VA loans, it's going to require the last 2 years of W-2s, as well as the last 30 days of pay stubs, the last 2 to 3 pay stubs, okay? Now, the third document that you're going to have to gather is asset statements. So this might mean multiple asset statements, or, only if you only have one asset statement. And what does that mean? Well, it means wherever you have actually are storing your money in that account, right? So not under your mattress or under your pillow, but it's actually in a checking account or a savings account. Or, if you're saving or trying to pull money out of a 401k, then we're going to need at least 2 months worth of the 401k statement. Typically, those are in a quarter, so the most recent quarter. Okay, if it's checking or savings account, then it's going to have to be at least the last 2 months. And then if there's money in the money market accounts that you're looking into, either withdraw or investment accounts, you got to make sure to show what the value is. But most of the time, the underwriters are going to request for you to liquidate those assets and to be shown in your asset account that you're going to be using to pay for your closing costs. Now, here's a big pro tip. You have to show the last 2 months, present last 2 months of the asset statements, right? The most recent last 2 months, but also you have to show the money trail. That's also what they're trying to see, right? Where is all the money coming from? Are you steadily saving into it based on the income that you're getting and then moving it in there? Are you getting, gift funds? If you're getting gift funds, then that's going to be something else that we can talk about. Or are you liquidating assets? Then we're going to have to identify where is your assets sitting right now, right? Stocks or bonds or whatever, and then how are you liquidating that, and where is it being liquidated, and to show where is it being put into. Sometimes I have clients where they're trying to liquidate those assets, and they liquidate and put it into an account that they didn't either notify us or share with us that account existed. And so all of a sudden it just shows up on the checking account that they plan to use. In those cases, my big recommendation is just last 2 months of asset statements for all your assets, and then work with your loan officer to decide what assets you're going to use. How is all that money going to be moved around? Where are you getting all that money? Sometimes it's simple. You saved everything in your savings account. So you just need to provide the last 2 months of your savings account. That's where you're going to, write the check or wire the money to the title company. So that's it. But sometimes it's a little bit more complicated. So the best thing to do is just, again, communicate clearly, like what is your overall strategy on how you're going to be paying for the closing costs using your assets? Are you going to be liquidating it? Is it all sitting in one place? Are you going to be consolidating in certain instances? In those cases, you're going to have to require to show all of your assets, okay? Now, the fourth document that you're going to have to show and provide is going to be any type of government issued ID. All right. So if it's a driver's license and you are a U.S. citizen, that's pretty simple. U.S. citizen, provide a driver's license or a passport if you want, and that's it. We're done. Now, if you are a resident alien, right, and you're holding a green card, what you're going to have to show is your green card front and back picture, not your driver's license. Also, if you are here with a work visa, then you're going to have to show your work visa information. There's typically going to be an EAD document and so forth. That's going to be accompanying what type of visa you are. And make sure you share with your loan officer during your pre-approval process, not after you've ratified and signed the contract, but during your pre-approval process, what type of visa do you have? This is going to be critical because certain visas don't qualify for normal conventional loans or FHA loans or VA loans. So make sure you are sharing with them what type of visa you have if you do have a visa and that's how you're planning to buy a home here, which is possible. I live in the DMV, which is the District of Columbia, the Washington, D.C., Maryland, Virginia area. And we have a lot of folks that are here on work visas. And a lot of them are homeowners in the United States. And so it is possible, but you just got to be upfront and transparent. What type of visa do you have? And then they have to explore, make sure that your loan officer is exploring, when is the expiration date? Is it in time or are you waiting for that to be renewed and all of that stuff, right? So ID, while it could be really simple if you are a U.S. citizen and it's just a driver's license, but it can also have a lot of nuances depending on how you are a resident here. If you're not a U.S. citizen, how you are here, and that's going to determine if you're going to qualify for the loan. All right. So make sure you communicate that. All right. So I was talking about bonus content. So the bonus content is if you are a self-employed home buyer, then there are a few things that you're going to have to provide, right? The first is going to be your tax returns. That's going to be for your personal tax returns as well as your business tax returns, because most likely if you are owning your business, more than 25%, you're going to have to show everything. So make sure you're presenting the last 2 years of your personal tax returns and business tax returns. And then additionally, you might have to show P&L statements and balance sheet statements. And then lastly is going to be maybe 12 months of clear receipts for your business, 12 months to show how you're generating your revenue. And then the other bonus is going to be for home buyers that own multiple homes. If you own multiple homes, there are a few additional things that's going to be required from you, which is going to be the mortgage statement, the most recent mortgage statement for the properties that you own, the most recent home insurance policy for the properties you own, and then as well as it's going to be the HOA statement, okay? Not the coupon, but the HOA statement. And make sure it has the property address on the HOA statement, as well as your name on there. And then hopefully it has the frequency of when the HOA is due. Okay, those are going to be the three most important things that you're going to have to provide if you own multiple homes. Okay, and then if one of them are investment properties and stuff like that, hopefully then it's on your schedule and your tax returns, and then we'll be able to pull that out. Okay, with that, again, hope this was helpful. Again, link in the description below for a home buyer's guide with a checklist if you're looking to buy a house. It really helps you on isolating exactly what type of house you want to get. So with that, have a great day.